All right, now that all that's out the way, let's go ahead and get started with today's webinar, Rev Up Your Listings in Reverse. Before we get started, I wanted to thank our sponsors, Old Republic, Home Protection, and also to remind everyone of tomorrow's webinar, VA Loans 101 for Realtors. You can register for tomorrow's webinar and also all future webinars at www.nsdcar.com/webinar. Now, a few words from our sponsor, and then they will turn it over to Reverse Mortgage, Robert Ross, and Ryan Cleese. All right, so it's on you, Gary.
All right. Hey, George, you want to start out?
You bet. Hey, good morning, everyone. My name's George Anderson. This is Gary Smith. We're here representing Old Republic Home Protection as it's kind of a gentle reminder to keep home warranties in mind as a part of the transaction. I'm being told that it's a seller's market, and a lot of times the home warranty is getting dropped out. So if you're representing the buyer, especially in that first year, people put a lot of money down. They have moving costs, they have expenses, so they're more vulnerable to problems that may come up in that first year. A $1,500 hot water heater, for example, might cause them a bit of a problem. And so who do they call? They might call you. Why? They shouldn't, but you're such nice people. You are so helpful. You might get the phone call. So making a home warranty as part of the transaction is good risk management. It's good business, and we're here to help. This is the team that you see. My high school picture up there in the left-hand corner. Deborah, Gary Smith, and Mona Simmental. So the four of us here are here as help to answer questions and to help you with the process, because things do happen. It's a problem-solving business. And you know what, Gary, did you have anything in mind that you wanted to cover?
Yeah, just in general, George is North County, Mona, she's in the middle, and Deborah's South County. And I work the whole county. So any questions, you have the access to two of us depending on your area. And, you know, George has been with the company for 34 almost years now, I think, 33. And Deborah's been at it. She's been in and with Old Republic about 20, and Mona and myself been about 4 years. So you got some good people in the industry here for you, and you have access to. But as far as just real briefly, what we are providing right now, we do have rekey and a bunch of new coverages we added to the most recent plan. I won't get into all that because we're pretty limited on time, but the biggest thing I want to touch base with you guys on today is about controlling the order and understanding the order process and how important that is, because a lot of times, hey, it's the last minute, oh, forgot the home warranty, oh, it's 500 or less or upgraded plan, or, you know, I would encourage you agents to be specific and understand the property. Every home is different. You've got a pool, spa, has AC, the refrigerator's leaving, it's gonna be brand new, we don't need coverage on it. So there's, you know, understand all the nuances of this house and then order correctly. I would encourage you to place the order and initiate as many orders as possible, get your name on those orders. Gives us, if it's with Old Republic, we track everything, and it gives us more leverage. So if there's something that does fall off, or we have to, you know, wheels fall off, we have to take a second look at something. So I think it's important. So in the RPA, as you see here, spell out the coverage you're looking for, you know, be word for word, because what happens if down the road, if your transaction coordinator fails to order it correctly or something happens, if it's written in the RPA, we will honor that and we'll cover that service claim 2 months down the road when you find out, oh, they forgot to add AC. Well, here we go. And, you know, so cover your back on that. But George, do you have anything else you want to add to that?
No, and that's it. Mistakes are happening, especially now, because there's a transaction coordinator, there's a buyer's coordinator, there are more people involved. So, you know what, we're here to help you. We appreciate the time that you allowed us today, and call us if you have any questions or any concerns.
Yeah, and you have up to 60 days after the close of escrow to kind of modify and change any of the plans with our company. But a lot of different ways, easy ways to order online. We have a toolbox. You can call us or text us. And at the end of the day, we just want to be a trusted member of your team. So we look forward to working with you guys. That's it for me. George?
No, that's it. Again, thanks for the time here. And
yes,
good luck
thank
out
you.
there. Yeah.
Thank you.
All right, great. Welcome everyone. Thank you for coming to our live stream, Rip Up Your Listings in Reverse. Just going to make a really quick announcement before we hand it off to our instructors today. We will be taking questions and we welcome your guys' questions. We'll be taking questions through the Q&A button, which will be on the bottom of your guys' screen. And once you guys click there, you'll be able to input it and we will answer all accumulated questions at around 10:30 and then at the end of the class around 11 o'clock. We'll probably go a little bit over today, so if you guys want to stay and hear your question answered, please go ahead and do so. And then if you guys don't have a copy of this PowerPoint, because I know some of you might have it, some of you may not, you can go ahead and shoot me your email, and then I'll go ahead and get that sent to you during the live stream. And what we're also doing today is we are giving away a $20 Amazon gift card to one winner. So if you guys want to enter, please go ahead and shoot me over your email via Zoom chat, and then I'll get you registered on that giveaway. With that being said, Ryan and Rob, you guys take it away.
Do it. All right, guys. I'm Robert. This is Ryan, of course. We are in the reverse mortgage industry, and we actually do these loans. But today we're going to spend a lot of time talking about the reverse mortgage for purchase and how that can help your business and get some extra listings that are out there. There's a lot of older homeowners that are trying to figure out what their next move will be. Whether it's to sell, access the equity in the home to subsidize their retirement needs. So we do feel that there is a push right now going on with older homeowners selling and getting that better home. And a lot of them are using this reverse mortgage purchase product to buy that next home. Ryan?
So if I could just demonstrate 3 different things today that will help a reverse mortgage get you a listing, it would be these 3 notions that I want you to pick up on. One is that there's a lot of clients that are getting mailers or seeing TV, people are mentioning reverse mortgages to them. And so they want to know. And guess what? A lot of them don't want to go on the internet. If they do, a lot of them want a trusted individual, and that's you, the realtor. Now, when a lot of people think that they're going to get a reverse mortgage to refinance their house, a lot of them don't qualify. They don't know it. Many people don't qualify. So even though somebody's asking you about a reverse, you may be looking at a listing. So one of the things we want to do today is help at least give you some information. So if they ask, you'll sound knowledgeable, and you'll also know in the back of your mind, this person has a good chance of not getting a reverse, so I need to stay tuned. So that's the one idea I want you to take away from today. The second is that clients may need to move. And a lot of them that are retired, their incomes don't qualify them to get financing. Well, a reverse purchase loan, the qualifications are much lower in terms of income. So that's the second thing, is we're looking to help you make a purchase loan out of a reverse so a client will list their home. That's the second idea I want you to take away today. The third idea, there's already a lot of reverse mortgages out there in place. And a lot of them are not set up properly so that, for instance, maybe the house isn't in a trust. Maybe the heirs don't understand what's going to happen when the borrowers pass away. So you have an opportunity whenever you learn of or you go find out that a home has a reverse, make sure that you have information to help the clients know how that house is going to get handled when they pass away or what the heirs need to do. And guess what? There's your listing. Those are 3 ways that a reverse is going to help you get a listing. And we're going to cover that stuff very quickly today. 3-hour class in about 45 minutes. Rob, let's get moving.
There you go. Today's covered topics. We're going to talk about what a reverse mortgage is, the basics of it, so you guys have a good understanding of it, how the reverse mortgage for purchase works, how this will apply to customers wanting to sell and repurchase with the reverse mortgage, what happens in the future with the reverse mortgage, very important, like Ryan was saying about those heirs that need to know this stuff, and you can insert yourself to get that listing when all borrowers pass away. And then second, of course, we want to show you guys some ideas, some software, and some marketing materials that can help find these listings in your farm by doing just a little more than you're already doing now. All right, Ryan, take it away.
Okay, reverse mortgage. Somebody asks you a question, I want to give you an easy way to know how it works and always be able to remember it. And it's like this. If you know how a regular loan works, you basically know how a reverse mortgage works. The difference, a reverse mortgage has an optional payment feature. That's really it. What we're doing is we're giving loans to people, whether they're buying a house or refinancing, just like traditional financing. You get a loan and you have a mortgage. Well, when you have a regular loan and you've bought a house or refinanced, you get a statement. And when that statement shows up, maybe you owe $300,000, maybe your payment's $2,000 for the month. Here you go, here's your $2,000. Next month, I expect to get a statement that shows I've paid down a little principal and some interest, and I'll make a payment again. That's a traditional mortgage. You gotta remember that. We all know that. So if a client says, how does this reverse mortgage work? You can simply say, well, you know how your loan works right now, right? Well, of course I do. I get a statement, I make a payment. Well, the reverse is basically the same way, except when that statement shows up, if you decide you don't want to make a payment, it's optional. Instead of making the payment, they'll just take whatever was due and add it to your balance. And then you can decide to pay that in the future or just let it continue on for as long as you live. So a reverse mortgage is just basically a regular loan, but with an optional payment feature. And if you decide not to make the payment, it's just going to add on to what you owe. So we don't have to worry about all these other things that maybe you think a reverse mortgage is or not. It's a regular loan. We put a mortgage on the house. We're lending people money to buy the house, or we're refinancing and giving them cash and paying off their existing loan. And then we're making the payment optional. Why is that important? Because Rob and I have been doing these loans for about 14 years now. And I think what we figured out is that a lot of the stress or the idea of not knowing how this loan works is troublesome to people. And one of the things is that when you're telling someone you don't have to make a payment, they're like, I don't even know how that could work. Somebody has to take my house, or maybe I don't own it anymore. No. If you just think of it as when you decide every month you don't want to make a payment, that you are in control, you can have it be a regular loan by making a payment, or you can decide not to. I think it changes how people react to the loan. We're not putting somebody in a loan where they're not given options. We're not telling them you have to do it this way. We're actually giving them just one more option that another regular loan doesn't have, but otherwise you don't have to worry about it being much different. That helps people to be more secure in their decision that I'm not doing something that's totally crazy. I'm not giving up a house. I'm just deciding to make a payment optional. So, good way to remember it. Now, a client's gonna say, okay, Ryan, what if I stay there for 50 years and I never make a payment? So I've missed 50 times 12. Crystal, what is that? 600. I've missed 600 mortgage payments. Can they send me something? Can they say, you need to start paying? Can they say the house is upside down, so you're in trouble? Can they do it? No. The answer is no. The deal that you make when you get this reverse is that you don't have to make a payment, and they can't say you've missed too many or the value is wrong or anything like that. They literally have to let you stay in there the rest of your life if you decide never to send in that monthly mortgage payment. So the loan has no end point. The end point is when you decide to sell the home or pass away. That's it. We don't have to worry about the in-between because we're saying that it doesn't matter. The in-between doesn't matter. You stay there till you sell or you pass away. There's a couple rules you have to follow. We'll get to that soon. You can get foreclosed on a reverse mortgage. How does that happen? We're going to get that coming up on another slide. We want you to be aware of those things. Now, think about this. Prior to 2009, Rob and I can only refinance people with this loan that we call an optional payment loan. So for a lot of realtors, they're talking to us and saying, Ryan, I have a client who's probably going to have to sell their home because they can't afford the payment. And the problem, though, that exists is how am I going to get into their next home? If they can't afford a payment on this house and they can't qualify for a refinance on this house, how are they going to get another loan to buy another house? And the answer was, yeah, we don't know, because prior to 2009, we could only do a refinance. So that wasn't great for realtors. 2009 comes, and guess what? Rob and I learned something. You can now use a reverse as a purchase loan. So now that optional payment loan that you can have on your house that you're living in, if you need to move, you can use it as purchase money. Well, how does that work, Ryan? Well, how does a regular loan work when you buy a house? You write an offer, you put a down payment on, you get a mortgage statement, and you make a payment. That's a regular loan. How does a reverse purchase loan work? You find a house, you put a down payment on, you close escrow, we send you a statement, except the payment's optional. Again, always remember to think of this as a traditional loan with an optional mortgage payment. It helps you answer a lot of questions It helps you get comfortable with how the loan works. Now, just making it a purchase loan or refinance loan, hey, that's great, but there's got to be something else, right, that helps our industry exist, that makes people get these loans. And that is qualifying. You see, we can get people a loan when they can't get any other loan. In other words, you might not be able to qualify for anything, but we'll get you a loan to buy a home or a loan to refinance. We have totally different underwriting requirements, and that's important, especially because we know there are a lot of older homeowners, and they need to list and they need to move. But without a way to get them a loan for that next move, they would have to stay hunkered down in their houses. And we have a lot of that going on right now. We have a lot of older homeowners who literally, they don't want to talk to a realtor, number one, because they think a realtor can't help me. I can't get a loan. I have to stay here and figure out how to make it through in this house. So we need to let them know, you don't have to be afraid of a realtor, a loan guy, or anything anymore, because now we have a way for you to sell and get something you like. You don't have to sacrifice living in an area you don't want to just because you can't get a loan. It opens up the door to a lot more possibilities. And now that we can say this and know that we're just giving them a loan with an optional payment, in other words, we're not forcing them to have their mortgage balance go up if they don't want to. Maybe they just get the reverse purchase loan because it's the only loan they can qualify for. And then they just make payments every month and they turn it into a regular loan. But at least the point is you were able to get them that house because they could actually qualify for this loan. So now we're not just talking about a loan where somebody doesn't have to make a payment. We're talking about a loan where somebody can actually qualify for this loan. They can't qualify for anything else, and then they just treat it like a regular loan. What happens if they get this loan and they make payments for 5 years and they say, I don't want to make payments anymore? Nothing. They can just stop. They don't got to call anybody. They don't have to do anything, and they'll never hear from anybody. That's cool. Rob, talk a little bit about what we just see with clients and realtors a lot when they're coming in and maybe they didn't want to sell the home. What has your experience been with our clientele?
Well, a lot of times we're getting in front of customers that, that have no intentions of selling, and they're literally living in their houses, trying to figure out ways to stay there and fight the good fight of making mortgage payments and taxes and all these things. But meanwhile, what's going on behind the background is that they may be spending down an asset like a 401k or an IRA or their last bit of savings, trying to stay there when all the reality, they should be trying to list that house and maybe go buy something different. So there's a lot of people out there that Ryan and I see that are just sitting there trying to figure out ways to make that work. And they're just waiting for the information. Maybe the reverse purchase is the idea that they've been looking for that can help them get over that fight and want them to list their house and go buy that next home. And so after many conversations, like a realtor may bring us a client who has no intentions of listing their house. And after we go there and meet with that customer and run a budget and really expose the issues in their budget and what's going on, all roads end up usually leading to the fact that if you were to list your home and get that equity out and maybe use some of it, a portion of it for your down payment, retain some for retirement, get to that smaller, better home for yourself, not bring a mortgage payment over. You're starting to see a lot of, people go down that path now, and it is the right solution in most cases because that's the goal of owning a house, not having a ton of overhead in your retirement years and not having a mortgage payment. That's what we're seeing out there, you guys.
All right, so the refi.
Ryan, I apologize. I'm trying to get Crystal the chat right now, so just take over for a second.
So the refinance, this is why we want you guys to know a little about the refinance. Because initially, I know a lot of realtors, especially, Rob and I have been teaching classes, and we wrote our first course like 9 years ago. And a lot of realtors were like, I don't even want to talk to you, reverse guy. You have nothing to do with what I do. And as a matter of fact, sometimes you keep people in homes when they should sell the home. So we have, though, to know something. Through the course of the last 14 years of doing refinances, sometimes anywhere between 40 to 60% of the people that think they're going to refinance with the reverse end up not qualifying. So that's your opportunity. The refinance reverse denial is your opportunity for a possible listing. So somebody asks you a question about a reverse, but they're kind of asking you more about the refinance, you should still have some basic information so that it can maybe come back around full circle to you. So the refinance is kind of like this. Remember how I said a reverse mortgage is like your basic loan? If you were to refinance your home with a regular loan, you're probably doing it what? Maybe to get some cash out, and possibly to lower your interest rate. Why? Because people maybe want a lower payment and they want cash out. Refinance. So if you refinance with the reverse, it's kind of the same goal, right? A lot of people are looking to get rid of the payment altogether, but also get some cash out. Well, that's how a reverse works on a refinance like a regular loan. Again, the major difference being not a whole lot of difference here. Finance with the reverse, you can get some cash and you just make your payment optional. Now, how we give cash out of a reverse can be a little different though, because on a regular loan, if you did a cash out refinance, they have you take all the cash at once. Well, the nice thing about the reverse refinance is the cash is made available to you, but you don't have to take it if you don't need it, kind of like an equity line, which is a good way, smart way to do it, because if you don't need the cash, why take it? Why start paying interest on something you don't need right away? So when you refinance the reverse, the first thing that happens is you can pay off your old loan, right? Make your mortgage payment optional. That's great in and of itself. But then that cash out, you could say, I want to leave that behind on a line of credit. It's guaranteed, so that way if I ever go back to it, even if the property value changed or something happened in the economy, it's guaranteed. I can just pull on it later. So we can get cash out of reverse in a couple different ways that are a little different than a regular refinance. But otherwise, a cash refinance reverse, much like a regular loan again. And I know I'm beating this drum, but I really want you guys to remember, we're more like a regular loan than a lot of individuals think. We've just made that payment optional. So know about the refinance. It can help full circle come back around to making that a client that is a listing. And the other thing too is, remember, if they end up refinancing the reverse, well, I don't like to put it this way, but we're all going to meet our maker one day. Insert yourself in the position to know the heirs, so that way you can help them and they will know that when something happens to my loved one that has reverse, I'm going to turn to this agent and they can perhaps be the one that lists the home. Important things. Okay, next, we want to get to questions. We got an example coming up, so we'll get through the example and then we'll get to some questions. Okay, so what we're looking at here now, for a refinance reverse or a purchase reverse, you got to live in a home. That's one way to get foreclosed on a reverse, is if you do reverse and then you move away and you rent that house out permanently. You can't do that. Got to be owner occupied. It could be a condo. It could be a single family. It could be a 1 to 4 unit. It just has to be your primary residence.
All right, let me go to the next example here, you guys. Okay, so this is your typical downsizing scenario using a reverse mortgage for purchase to accomplish that. This example is based on a 73-year-old borrower. And just remember, the entry-level age to get a reverse, the FHA reverse mortgage, which is called a HECM, Home Equity Conversion Mortgage, is 62. We use 73 because it seems to be a sweet spot, but trends are showing that younger people are starting to get these loans as well. Here's how it works. Let's say you found a listing. This house is going to be listed for $850. This customer maybe wanted to accomplish a few things. One, they want to get rid of their mortgage payment. They want to get to a smaller 1-story house, smaller lot, smaller square footage, easier to maintain, right? So you list that property. After that house is sold, they have $400,000 in net proceeds. This is the money that they would use to either buy a house all cash, or they would use this for a down payment for the next property. In this scenario, you represent them in buying a $600,000 home, a downsized property. Based on the age of 73 and the net proceeds available, we say, look, you have $400,000 available to you. Why don't you take $259,000 of that and put it down on the $600,000 home? Naturally, we're going to give you a loan of $341,000 to finish off the purchase price. And what's great about this transaction right off the bat is that there's $141,000 left over from the previous house they sold for $850,000. So now you got a customer that had no cash in the bank, struggling making mortgage payments in a bigger home, and now they got $141,000 in the bank, plus they have a home over there, a roof over their head, right? And then the other benefit here is that the mortgage payments are now optional. And that's a huge benefit living in retirement, because the average Social Security check out there is not very much. And removing that mortgage payment from the equation is certainly beneficial. This person may have had bad credit scores. We don't necessarily care about FICO scores. What we do care about is, how is the last 24 months of your credit history? How is the last 24 months of your property tax payment history? How is the last 12 months of your homeowner's insurance payment history? And if you have an HOA fee, how is that history as well? So we care about a few different things. We want to see how you performed over the last 24 months in payments. And if you have a late of some kind, we can overcome it typically with a letter of explanation and some supporting documentation to cover the hardship. So this is more of a make sense type of loan. And they're very lenient on that type of stuff because, you know, sometimes in retirement you do fall behind or you get stuck with certain bills, and there's usually an explanation as to why. Limited income. The fact that borrowers can qualify living on Social Security alone is what makes this loan really get its legs. I mean, you can actually qualify for these items because there's no mortgage payment involved, right? So we don't have to worry about that. There's no debt ratios per se. We just got to make sure that the income you have coming in is enough to cover taxes, insurance, HOA fees if applicable, and the average cost of utilities in that square footage of home. And most of the time, our borrowers that are living on Social Security meet that criteria. So it's a very make sense loan in that regard. Now, a couple of things you need to know before you write an offer using this type of financing is pre-underwriting is a big deal in our industry because first of all, we're dealing with retired homeowners, right? Last thing we want to see is a retired homeowner list their house, sell it, and not be able to get that replacement home. So we want to make sure long before you get the house listed or write an offer, we have a chance to really pre-underwrite the file, go through all the credit report, income, and really set the file up so we know for sure this thing's going to work out. We will actually get it in front of a DE underwriter or an FHA underwriter to make sure we can get that approval. Because like I said, the last thing we want to see is a retired homeowner not to be able to buy that replacement home. Before we can order an appraisal on the home they're buying, the client has to go through reverse mortgage counseling. This is something that we set up in the initial appointment typically when we're getting all the information to pre-underwrite. We will set them up with a list of counselors. They schedule it, they pay for it. It is a cost to them. It's about $125. Once they go through the counseling session, then we're able to pull an FHA case number on the house they're buying and order that appraisal as soon as possible. Next, we can't have any seller or agent concessions. So a seller, for instance, could not give cash toward closing or closing costs or anything like that. You guys as well, you guys cannot credit any of your commissions on these transactions. And this also goes down to personal items, right? For instance, if there's a golf cart coming with the house, that's not part of the house. That's not real property. That's considered personal property. That can go on the contract, but no value can be given to it. So it can't be a concession. Get with us on that. We'll make sure you guys are set up for that. The FHA mandatory escape clause. This is an FHA insured loan. So make sure that you include this document with your initial offer. This is in your win forms in the FHA section. And of course, it must be signed by all parties. Last but not least, this 888 number here is a hotline for real estate agents only. If you guys ever call this line, it means you're probably either with a customer or working on an RPA, or you need some questions answered pretty quickly. So I urge you to use that hotline. We will get a hold of it. If we don't answer it right away, we will call you back usually within 10 minutes or so. So use that number if you ever have any need for it. All right, are we in time for some questions?
Yes, we do. So there is a question by Elizabeth. Rob, do you want to just get in there, read it, and then answer it?
Yes, I will do that right now. Let me get into the Q&A. Here it is right here by Elizabeth. Can a senior couple get a reverse mortgage to purchase if they are currently renters in a senior community? Okay, so yeah, you don't necessarily have to own a property right now to go buy with a reverse mortgage. As long as you have the down payment, which could be just cash you have in your checking account or wherever you got that money, we can actually accept 100% gift funds from family members as well. So as long as you got the down payment, you can go buy with the reverse, but just remember the house you do buy has to be your primary residence.
Okay, perfect. And then Ryan, a question for you from Mercedes is, what kind of interest rates are there right now? You want to talk about it?
Yeah, real quick. So we have two basic rates, a fixed rate reverse. Those are running anywhere between 3.5 to 3.9. And then you have your annual adjustable, which are running at about 2.8%. By the way, the annual adjustable, counterintuitive, that's the most in demand product. Probably about 80 to 90% of reverses that are being done are this annual adjustable. I'll give you a quick clue as a reason why. The fixed rate loan is more restrictive on how you can use money out of the loan and also getting a line of credit. The annual adjustable loan is the one that will give you a line of credit. So we do things a little different in reverses, and I have a fixed rate on my house. Believe me, I have a 30-year fixed. If I were to get a reverse right now, if I was old enough and I could, I would go the annual adjustable. So it's just the product works better that way. And yeah, a little counterintuitive.
Okay, great. Let's move on. Oh, wait, before that, just want to quickly say I did send out the first batch of PowerPoints to everyone who had requested it. You guys, you still have half an hour to enter our $20 Amazon gift card giveaway, and we are going to draw before this live stream ends. So go ahead and send me your best email if you want to both receive the PowerPoint and or you like to enter the $20 Amazon gift card giveaway. With that being said, let's go.
Yeah, it's an easy 20. Go get it, guys. All right, moving on here. Let me get in here. All right, we're going to breeze through these real quick. I urge you guys to do a little research on our boomers, what's going on out there and why they're going to be using equity to do certain things, buy houses and refinance and access. We got 10,000 boomers turning 65 every day. We got 80 million boomers in the country. Almost half of our boomers have no retirement savings, and just a little bit more than that have some savings in retirement. So what does this mean? That means the bulk of our retired generation out there, our boomers and our silent generation, are living on Social Security alone. This didn't happen overnight. We had a lot of, you know, my dad, when he retired, he got a full pension from his employer. That doesn't really happen anymore because all of our retirement strategies are self-funded by ourselves. And, you know, it's hard to save money and fund your own retirement, especially living here in California. Now, obviously, this isn't just about the boomers. The entire population, in my opinion, according to the statistics I've read, are not doing enough saving for retirement. The difference between someone like myself, who's 46, and a boomer who's maybe 75, I'm still working at this point in time, so hopefully I can overcome my shortfall in retirement, right? But, you know, our boomers are left with not too many options. However, they got a lot of home equity. And that's where the magic's at. They have about almost a little over $7 trillion in homeowner equity out there. And we had a little conversation before this Zoom started, but a lot of financial planners are starting to pick up on that and bring that home equity into the overall portfolio or retirement strategy. So reverse can certainly aid in bringing that home equity and making it safe to use and not getting yourself into any trouble. Let's talk about really quick what happens in the future with a reverse mortgage. This is where you guys should pay attention here, because like Ryan said earlier on in the presentation, insert yourselves to those houses that have reverses on them now. Understand the slide. That way you can get with the heirs when those borrowers pass away and show them their options after their loved ones pass.
And so I do got to say, everybody, we do get a lot, the volume of calls that we're getting is really increasing with realtors that have found somebody where there's a reverse on the house and maybe the parents have passed away and the heirs are trying to figure out what to do. You want to be ready for those so that they know they can trust that they got the right person for that job. So understanding this end of the loan process can be very, very important. So anyways, Rob, take it away.
So there's two likely outcomes when all borrowers have passed away on the loan. Either the house has equity or it has no equity, right? So that's above water and underwater. So here's the first example in the positive equity or above water situation. Let's say we have a home value for $600,000. We got a current reverse mortgage balance of $400,000. All borrowers have passed away. Here's the heirs' options. If the heirs would like to keep the property, they're more than welcome to. However, they do need to get that loan paid off because it was made for the deceased. So they would do that by either A, refinancing the loan to a regular mortgage, let's say, or they would come in with cash and pay down the loan, or a combination of the two. So no matter what, the loan has to be paid off because all borrowers that are originally on the loan have passed away. If the heirs don't want to keep the house, no problem. Then they can simply list it with a realtor and sell it. And whatever the difference between the payoff of the mortgage and the house that it's sold for, that would be the equity they would inherit. Number two, this bullet here, the selling option is also available for the homeowners themselves. Sometimes homeowners have reverses, and then after several years of having that reverse and living in that property, the house isn't the best situation for them anymore. Those people can certainly sell the property and take their equity and go do something else with it. So what I'm trying to illustrate here is this is just like a regular mortgage, right? You can pay it off, refinance, sell the property. There's no prepayment penalties on these loans either, which I'm going to talk about in the next slide here. So the other example, let's say we have a situation where the borrowers pass away. If the house is underwater, this could be an issue, but reverses have a special rule called the 95% rule. So in this example, we have a $300,000 home value, the same mortgage balance of $400,000. As you can see, we are $100,000 upside down. Here's the heirs options after all borrowers have passed away. If they want to keep the house, again, they're more than welcome to, except they don't have to pay off the entire $400,000. They only pay off 95% of whatever the market value is. So in this example, the value is $300,000. 95% of $300,000 is $285,000. That's the payoff to keep the house. If they don't want to do that either, if they say, you know what, we don't want to pay off the house, we appreciate the 95% rule, that's fine. They can walk away, and what will happen is the house will go into normal foreclosure like any other loan, and then eventually the house is sold at auction or goes to REO if it doesn't sell, and now the house is gone. This is a non-recourse loan, you guys, so nothing's going to happen to if the parents own other houses or cash or assets. It's all untouchable. It's a non-recourse loan. Of course, we live in a non-recourse state as well, so there's nothing that's going to happen there. No strange 1099s or anything like that. No judgments, nothing. The last thing they can do is they can hire a real estate agent to short sell the property. Really no benefit to the heirs in this situation, but there are realtors out there that will focus on short sales. They will find the houses that have reverses on them that are defaulted, usually because of death. They find the next of kin, they get a hold of that person, and they try to get the short sale. So that's certainly an option as well. One thing I wanted to point out there was that, you know, these loans, again, they have no prepayment penalties. So you're free to do whatever you want with these loans, just like a regular mortgage. Ryan, anything you want to add?
Yeah, let's talk about a trust real quick. We want to see these homes in a trust. By the way, we changed the rules not too long ago, a few years ago, where we used to say you couldn't have anybody else on title but the borrowers. The problem with that is that we were putting people in a probate situation if they didn't have a trust. And we said you can't have anybody on title with you. Well, guess what? You end up in probate, right? So the rules are starting to lighten up. You can put somebody on title with you that's not on the loan. That doesn't mean they get to live there when you pass away, but at least it means you're avoiding probate. I'm not saying that's great estate planning, but I don't want to see houses going to probate with reverses because it's no fun. But ultimately, yeah, we are a trust-friendly loan. As a matter of fact, Rob and I, whenever we're doing a loan for someone, we're always saying, did you get a trust? Do you got a trust? Here's where you can get a trust. Please get a trust. So that way we know we're taking care of the client properly and they can invest in the trust. Agents, here's your opportunity. You can go out and find people that, especially older homeowners, the house isn't in a trust, become that trusted person that says, you know, here's what happens if you don't have your house in a trust, you go into probate. We will put any reverse mortgage in a trust. We'll even put them in an irrevocable trust, which we couldn't do before. Of course, special rules apply, but let's get people taken care of. That's what we want to see happen.
Absolutely. Okay, you guys have all heard of these myths before, but does the government or bank own the property? Of course not. Will I or my heirs lose future appreciation if the house gains in value? If the house gains in value, that's equity that you have for yourself or your heirs when you pass away. Can my heirs inherit the property after I pass away? Of course they can. Ideally, it's always better to have it in a trust to make it a smooth transition. So we obviously urge clients to do that, like Ryan just said. And if my house ends up being underwater, let's say you lived a long life and your balance is way higher than the value, they're going to send you some notice that you can't live here anymore. Absolutely not. That's the guarantee that FHA gives you, is that as long as you're abiding by the rules of the loan, you can stay in the house for the rest of your life, despite the balance, despite the current market you're in. Those said rules are right here. So we really have three major rules when you get a reverse to stay in good standing with the loan. So the first one is occupancy. We talked about that briefly in the beginning. This is an owner-occupied loan. So sometimes the last remaining borrower in the home may go get external care outside the house, like in some sort of skilled nursing facility. This could be a problem because if you're in that facility for more than 12 months, FHA or HUD wants that loan paid off or refinanced or the house sold or something. So sometimes the loved ones may decide to bring that person back home again, right, for care at home. So they bring them back out of the facility. If they get back to the home within 12 months of leaving it, the clock restarts and their loan remains in good standing. So we usually tell our customers, like, hey, if this is you, if this is a possibility of you, and your heirs will bring you back home to get care, just make sure you keep the inbound paperwork to the nursing facility and the outbound paperwork. That way you can demonstrate that to HUD or FHA or your servicer to let them know that, hey, I was not outside the house for more than 12 months. This loan should still remain in good standing. So occupancy, big one. Number two, property taxes, homeowners insurance, HOA fees. These all have to be paid on time, right? If you default on your property taxes, your lender is going to foreclose on you, just like a regular mortgage would do. This was a big problem in our industry. Prior to 2015, all the way back to the late 80s, we never made sure that people had enough money to handle these items after getting the reverse, despite not having a mortgage payment. After 2015, we now make sure the income they do have is enough to qualify to handle these items after they get the reverse. So that was a big change in our industry. Did it disqualify some folks? Yes, it did, but for the good reason that they should probably not have a reverse and look to something or another solution. So that was a good change in our industry. Number three here, maintain the home to minimum FHA standards. Well, what does that mean? Well, FHAs or HUD's got a big list on their site about this. Here's what we tell our customers. When you get the reverse mortgage, when you got that appraisal done, right, on a purchase or refinance, that appraiser is there for two reasons. One, to demonstrate that the value is there. Number two, to make sure the house meets FHA minimum standards. If it does and the appraisal comes back with value as is, that means that it does. So if you keep it in that condition for the remainder of your life or somewhere near that, you're never going to have a problem with any kind of maintenance on the house or anything like that. They don't do any drive-by inspections or anything like that. The only way this would ever turn against you is if maybe your neighbor saw that your house was falling apart and was a danger to them. They might call the city and the city might put a violation on your house, and then eventually HUD may get wind of it. But usually the number one culprit for our defaults is death, right? We have a little bit higher normal than defaults in your traditional mortgage, but that's because of death. A borrower passed away and no heirs ever stepped up to get in there and talk to the servicer and figure out their options. So it's a very important thing to discuss, the previous slide as well as this as well. Ryan, anything you want to add to that?
Nope. You hit it on the head, Rob. If you hear somebody say that reverse mortgage has got a high foreclosure rate, it's not because we're foreclosing on a real person, the borrower still living in their home. It's because the heirs, you got 12 months. If there's one thing we want to demonstrate, FHA, the government, the bank, nobody wants us home. They're giving you 12 months from that last slide to get in there and refinance it, sell it, do something. When they got to foreclose on these homes, they lose their shirts. Believe it or not, FHA does not do a good job, and they lose their shirts. They want heirs to end up with these homes. So just keep that in mind. Agents, especially important for you. They will help you to get that home to an heir. Get involved early.
Absolutely. Okay, Ryan and I have been in the industry for a long time. If you told me or asked me a question right now, what does a 76-year-old get on a $675,000 purchase price? I'm going to say I have no idea. You're going to say, what have you been doing for 14 years, right? Well, we made an application and we use it day in and day out. So this application is great. It's very simple. You put the borrower's ages in there and the purchase price and hit calculate. It'll tell you the down payment and the loan amount to make that transaction happen. For married couples, only one spouse needs to be the eligible age of 62. We will, for instance, if you have a 62-year-old and a 55-year-old, we're going to protect the underage spouse, but the loan will be based on the 55-year-old because they have a longer life expectancy. This was a big change in our industry. Years ago, if there was an underage spouse and they wanted to do the loan, they would have to sign documentation that says that I know that I'm not on the loan and I'm not on title. That's a problem though, because the actual borrowing spouse one day in the future will eventually pass away. And if the underage spouse was alive in that scenario, then they would have to figure out how to get the loan paid off, either by selling it or refinancing it. Years ago, FHA changed that rule, and now we will protect the underage spouses, which is another good thing to talk about here. If you come across a couple or somebody who has a reverse mortgage, and there's a spouse that's living with them that's not on the loan or on title, help them get on title through a grant deed and get them protected in the house like Ryan was talking about earlier. It's a very big deal. You can do them a very huge favor, right? Unmarried borrowers. So any combination you can think of. Father, daughter, brother, sister, best friends, girlfriend, boyfriend, any combination. Everybody has to be over 62 to be protected on the loan. However, if there's 4 people, for instance, all over 62, we're going to look at the youngest person in that group of 4, and the loan amount will be dependent upon that age. And then last but not least, 765, 600. You guys have seen this number. This is the maximum loan amount for a regular FHA mortgage. With the reverse mortgage, this is the maximum value we use. So if someone's getting a reverse mortgage on a 765 home, and you have another person down the street getting the same type of reverse on an $800,000 home, and they're both the same age, they're both going to get the exact same loan amount. We're not going to increase it because the other person has a higher valued home. So 765, 600 is our maximum value and our purchase price that FHA will calculate the loan to value on. Once you get beyond 765 and you get up to around 850, we feel that moving towards the private sector is probably the way to go. There's private reverse mortgages out there. They are non-FHA. Ryan, you want to talk about that? I got a printer going over here.
Yeah, stop working, Rob.
Downstairs.
We have these non-FHA reverse mortgages, and they're starting to get a little bit more active out there. Sometimes for wrong reasons, sometimes for good reasons. There's a proper time and place for them. They don't have FHA mortgage insurance, but that's kind of a teaser because they actually have higher interest rates than the FHA loan does. So you end up equaling yourself out or actually paying more for the private reverse in the long run. So the non-FHA or the FHA, which one you're going to choose is less about the cost, which one's going to give the long term, which one's going to provide the better solution. So we have to help you with that. A little too much to get into right now. All right, so we've made it through the what is the reverse mortgage. I hope those 3 things will stick with you. 1, someone asked you about a reverse, go back and refresh yourself. By the way, Crystal's going to give you access to little short, like 6 or 7 minute videos of all the stuff we talked about and more. So that way, if you're going to talk to a client and they ask about a reverse and you think they might, watch that little refresher, turn it into something for you, and just be value added for them, right? Second thing is the ones that do have to sell. Reverse purchase, you get both transactions. And third is helping the heirs. Those are the 3 points to help a reverse mortgage turn into business for a realtor. Let's talk more about this now, though. So, of course, we just went through a lot of information, more than I care to even do again right now. I say reverse like 100 times a day, and sometimes I just want to stop saying reverse. So for you guys to try to get all this information and put it in your minds and then make it turn into value for your client or a listing, I think we want to help you more with that. So here's how we can help you turn this, what we just did, into value add and business for your clients. Number 1, think about your sphere, okay? Because in your sphere, if you either have clients that have parents that own a home or a lot of your clientele is older, just know that for a lot of our homeowners, there's things that happen that unfortunately turn into a reason to sell or get a loan. Sickness of a spouse is a big one. Rob and I see a lot of people turning to either sell their homes and buy a next home with the reverse or get a reverse refinance because a loved one has fallen ill. So you always just want to be checking on them. How are you guys doing? Of course you care, but you want to know what their health is so you can be there ready and not another agent who maybe doesn't care as much as you do to be there to get that under control. So that's the first thing to watch for, is the health. Second thing, look at the house, especially in your neighborhood. If you have older homeowners and you just know that they're older, maybe you never met them before, but there's the house you drive by a lot, If you see that house starting to deteriorate, maintenance not happening, a lot of times it's not because they don't want to. It's simply because the means, the resources aren't there. And that can cascade down to the point where maybe all of a sudden the house has been sold to a cash buyer and you're like, man, I missed that. No, you didn't miss that. It's that you got to get there and be part of that earlier on so you can be a better resource than a cash buyer. You can get them to their next house. So that's what you want to look for in where you live and also in your sphere. Now, let's say that you've done that and you're like, hey, Ryan, I do know an older person lives in my neighborhood and their house is kind of getting, looks like maybe there's some cash problems there. Or maybe somebody in my sphere, Ryan, I do have somebody in my sphere who's older and I think they might be thinking of downsizing, but you just don't want to lay it on thick for them, right? And all of a sudden be annoying to them. So we got a way to help you out with that. Rob and I, after 14 years of working with these older homeowners and working with a lot of you realtors, we've written some great newsletters that you can just give to them and you will have your name on them and you can give them out to them. We will help you send them out. Well, I'll show you in a tool in a second, but the idea is to stay in front of them consistently and just be a resource. And we've written all this stuff and we put all this stuff there for you guys to use because we want you to be that resource. So first thing, we have this website. It's called GoCourtem, GoCourtem.com. What is that? If you have a few clients who you think, yeah, they're really close to this, Ryan, or yeah, I know this homeowner, the house is in bad shape and they're older and maybe they need to do something, but I don't want to go knock on their door. Hop on our website, GoCourtem. You can put their name and address in there. If you know them and have an email, you can do that too. And we will actually mail them and email them not only a newsletter, but then a letter from you asking if they thought any of the articles in the newsletter interesting, like how to transfer property tax, or how a trust works, or how an optional payment purchase loan works. Spark their interest with information, and then we'll follow up with them for you with the letter asking, what do they think of the information? And we'll do that for 6 months. We can't do it for your entire database, of course, because we just don't have those resources. But we'll help you with a few of them if you think that they are something that might turn into something. You put them in there. By the way, we notify you when we send something out with an email. So that way, if you get a call, you're not surprised. And we just are a partner with you in that to try to help generate some business for you. Of course, our information goes on there too, so we can meet all the legal requirements, but it's really coming from you. That's GoCourtem. Try it out. It could be fun. If you got somebody, put them in there. We'll mail them. We'll email them. See if we can't get some business for you. That would be fun. Maybe we'll get a loan. That would be even funner. Okay. Next, we have course refreshers, by the way. And Crystal's going to explain about this in a second. Part of that course refresher, though, how are we doing on time, Crystal?
Okay. We're at 10:53. Do you want me to just go ahead and take over from here?
Let me just cover the Title Pro for a second.
Okay.
One of the things that we really can't cover too much on is a system that's called Title Pro. And what that is that's a little window into what's going on in your neighborhood, your neighbors, or just a homeowner in general. And since we thrive on, especially nowadays, I know you may get tired of hearing about data. Heck, I'm getting worn out on Zooms, but data, Zooms, all this stuff is really important for business. And Title Pro and with the videos that we'll let you guys watch on our website is a way for you to make it easy to find out maybe the guy who lives all the way down the street from you or the gal that lives behind you is an older homeowner that does need this information. And you want to be the one that gets to them, right? So we show you how to use this Title Pro. We show you how to find people who might need to list. And guess what? You can use the Title Pro and the GoCourtem, and right now it's not going to cost you anything. The Title Pro, if you just get 1 or 2 leads out of there, you can do it with basically a couple cents. They're very cheap. It's not our software, but it's very cheap. The whole idea, though, is to keep you active. I don't want you guys to have to think of all these things on your own. I want you guys just to really already what you're doing in your course of business every day. Just throw somebody in that GoCourtem. If you got a few minutes and you want to hop on that Title Pro, try it out. But hopefully we can find some business and you can find some more business with this information we got here without it being a big deal. I don't want you to think you got to start a whole new thing. I just want you to do a little extra than what you're already doing, and maybe it can make a big difference, right? Sometimes a little effort applied in the right area can make a huge difference. That's what we're trying to help you out with. Crystal, take it over.
Okay, will do. Before I begin, just really quick, guys, last call for the Amazon $20 giveaway. Go ahead and shoot me over your best email in the Zoom chat, and then I'll get you in that giveaway ASAP. All right, so course refresher. So you guys just took something that's supposed to be 3 hours and 45 minutes. Honestly, quite amazing for you guys. Like, that's awesome. But here's the problem, is that because we don't have that rest of the 2 hours, we skimmed over a lot, and there was a lot actually we didn't even talk about. For example, there's something called overfunding that you can do with the reverse mortgage for purchase. You know, it's so in depth, and that's what the course refresher is all about. You can learn about overfunding. You can learn about the demographics, the stuff that we skimmed over. And how you do that is we have these 6 videos in a small 5-minute to 12-minute chunks that you can watch at your time and at your pace on the different topics within our course. This way, and we've actually had agents that, let's say we're on a drive to a client's house and they know they wanted to pitch the reverse mortgage purchase to get that listing. And what they did was they just took one of our course refresh videos and they just put it on while they were driving. And that made them refresh, that information became top of mind to tell their clients. So that's what the course refresher is about. And I know that we already have questions like, how do you get access to this course refresher? Well, this is part of our website, which we will give you complimentary logins for. And here's some other things that you can get on our website. Rob, next slide. On our website, we have something called downloadable marketing materials. These are professionally made. We made them by ourselves. Here's the newsletters that Ryan talks about in Go Quarter. You can also just go ahead and just download these, and then on the back, you can put in your own personal information, like your name, your company, your license, and all that. We have flyers, we have postcards, we have door hangers. You can put your headshots, your info, everything. So fully customized, professional, complimentary, downloadable marketing materials. The other thing we offer too is guys, we have videos and we have tutorials on Title Pro 24/7 and Remind, because we want to let you guys know that we're not just here's a bunch of software, have fun, figure it out. We want to show you guys how to use Title Pro, how to use Remind to find those older demographic that is in your area that need to hear this. So you can follow our videos on that. And then we also actually have follow-up videos and some others that we've made where we actually took the data on Title Pro and Remind and actually went and door knocked it ourselves in our local video. So you can watch it on your own time. So you get access to all that. And then of course you get access to course refresher. And then the second login you guys get that is complimentary will be the access to Title Pro 24/7. That is going to come from Title Pro themselves. It won't come from us, but we will initiate that for you guys. So guys, once again, logins to our website, thereverseeducators.com. Rob, you want to go to the last slide? It's right there. That's our website. And the second complimentary login is to Title Pro 24/7. With that said, I just got a bunch more emails. I got to put them in a giveaway. We got 2 questions.
I'll jump on them.
Yes. All right. Go ahead and jump on them, Ryan.
So, I think, Elizabeth, that was a question from your last one that got answered in terms of buying a house in Nevada. Prop 19. So Prop 19, of course, isn't passed yet. So we really haven't had too many discussions. Our newsletter deals with Prop 6090 while we still got it, which is transferring tax base. Of course, we hope that Prop 19, hopefully we don't lose our ability to hang on to our lower property taxes and transfer them. So we'll see how that goes. What percentage of reverse mortgage purchase price is required for the down payment? So Virginia and everybody, that's what the calculator is for. Every age is a different down payment. Same thing on a refinance. Every age gets a different loan amount. So we have to use technology to help. That's why we allow you to download that app. Little secret too. That app, even though it's a purchase calculator for down payment, you can use it for a refinance. The loan amount on a refinance will be the same as the loan amount on a purchase. You just got to punch in that calculator, put the age, and the purchase price is actually the value of the house, right? But then the loan amount, same thing. And I think Rob mentioned it, but that calculator does not work for jumbo loans. It's only for the HECM, because that's the majority of what the reverse has done right now is the HECM government FHA insured loan. So hopefully that answers those questions. So thanks for hanging on, guys. Crystal, you ready to spin the wheel and give it away? And then we're here to answer more questions if you'd like. Jump on our website. Have fun with this. Look at some of the videos we do. Rob and I pull stuff out of the Title Pro and we get in our car and we go try to door knock the thing to see if it is real. Because I wouldn't want to send you guys on wild goose chases. I don't want to send you software or have you use software, even if it's free. I don't want you to waste your time if it doesn't work. So Rob and I do it just so you can see what happens. So it's really fun. And by the way, I'll tell you one thing, like pulling that data and going and knocking on the doors and trying to find someone does for me really makes me value the clients I already have, so I know to stay in touch with them. Because after you realize how hard it is to bring new clients in, you can do it. It's fun. But man, do I love the referrals, and I pay attention so much to those clients when I spend 15 minutes in a car knocking on a door. So you get something out of it no matter what. Crystal, let's roll. Let's give it away.
I am almost ready. Rob, anything else to say? Last words?
Yeah, I mean, make no mistake about it. You know, Ryan and I are doing these transactions right now. They are out there. Realtors are getting listings and they're representing them and buying that next property. And the reverse purchase is the straw, so to speak, that broke the camel's back to get them to list that property. So just take the information today. Try not to get too deep with it. Just know that this is a possibility. These homeowners are out there. When you see one, you're going to know right when you see it, and you're going to be, oh my God, that's it. Reverse mortgage for purchase. That's exactly what Ryan and Rob were talking about. And then hopefully we can help you put that transaction together to bring it to fruition.
Okay, great. Yes, I am ready. I'm going to take over Rob's screen right here. Okay, you guys see my screen?
Yep.
All right, we're going to click and spin.
Don't see my name on that wheel.
You didn't give me any money, so.
Oh, Gary, did you put Gary on there? George?
Yeah, come on, come on.
Come on, the sponsors.
All right, congratulations, Janine. You are the winner of our $20 Amazon gift card giveaway. So I will contact you afterwards to get that over to you. All right, I think we're done here, Shirley. Is there anything else you want
everybody,
to say?
Old Republic, thanks for supporting the webinar and being here too.
You got it. Thank you.
Thanks, everybody.
All right. Thanks a lot, Home Republic, for sponsoring today's events.
Our pleasure.
Hey, you guys, we should probably stay in touch. You do a good job. Maybe we can kind of team up for an event with an event, you know?
Up to.
Yeah.
So this is our 500th Zoom today.
Wow. Okay.
Yeah.
And I love the wheel too. The wheel
Sure
is
feels
very
like
cool.
it, I'll tell you. We've done a lot of
Yeah.
these. They're fun though.
The wheel's the best. George, by the way, we could probably just throw the wheel for an hour and people would like it more.
Yeah. Exactly.
Okay, and if we don't have any other questions, then again, everybody, thank you. Reach out to us if you need us. If you email us, sometimes it takes us maybe a couple hours to get back. If you text us, that might be quicker, but we will get back to you. And we're happy to answer any question you have, even if it's just on trying to find some business. If you get a listing and it doesn't turn into a loan, hey, that's the same excitement level for us. Just knowing that the ideas work and the marketing and all that stuff works, hey, that's awesome. And I get just as excited about that. So let us know how you're doing and stay in touch.
Stay in
Thanks, guys.
touch. Bye for now.
Bye for now.
Bye. Thank you.